Hey everybody, and thank you for joining the videos today. So in this video, we're going to cover FEGLI Option B. We're going to look at what the premium costs are while you're working and how that cost and coverage changes during retirement. First, I want to introduce myself. My name is Christopher Lee. My wife, Allie, and I own Independence Benefits. And Independence Benefits is a retirement planning firm that specializes solely in assisting federal employees. So, what we do is we help create retirement plans for federal employees. And as a product of that, a lot of times we end up looking at things like the benefits you have while you're working and how those benefits change in retirement. So, with that, I just want to jump into it. So, what is FEGLI Option B? So, FEGLI Option B is supplemental coverage that you have the ability to elect upon hiring or during a qualifying life event. So, Option B, it's simply multiples of your salary in additional life insurance coverage. And when you elect it, you can choose anywhere from 1 to 5 multiples of your salary. So, as an example, if we use a federal employee that has a salary of $100,000 a year and they choose the 5 times multiple, that means that they have an additional 500,000 in coverage that covers themselves if they were to pass away. So the great thing about that FEGLI Option B coverage is there is no medical exam required. So when you elect that coverage, they're not forcing you to go through a medical exam process. Everyone is automatically approved upon hiring for that coverage. So some of the key facts about it is OPM does not subsidize that Option B premium like they do with the FEGLI Basic. So if you choose that coverage, you are carrying and paying the full cost of it. Those premiums do increase every 5 years. So that's something we'll look at just in a second. Option B typically starts out relatively cheap while you're working, but in retirement, that cost increase can get pretty substantial. And that coverage is separate from things like your FEGLI Basic or your Option A or C, which are additional choices. That FEGLI Option B stands on its own. So let's look at the premiums while you're working. So you can see here starting out, if someone, and we use that same example of someone with $100,000 salary that has elected 5 times on the Option B, you can see that under the age of 35 and actually up until age 39, they're only paying about $22 a month for that 500,000 in coverage. So that is very, very cheap. You'll see though that starting at about age 40, that premium does start to creep up over time. And you can see by the age 50 is really where you start to see the big jumps. So at age 50, that same coverage is costing the employee $108 a month. And then by the age of 60, that premium has skyrocketed to $433 a month. So the same coverage that you had while you were 39 that was costing you $22 a month, at age 60, it's costing you $433 a month just to maintain that coverage. So that's a product of OPM not paying any of the premium cost for you. You're paying that cost in full. And with the cost increasing every 5 years, it can get really substantial as you get closer and closer to retirement. So in retirement, what choices do you have? And really, there's a few. So the first choice you have is you can choose what's called a full reduction. So in that example, coverage begins to reduce by 2% per month once you hit age 65. And then it drops all the way down to zero coverage by the age of 69. With that reduction option, you stop paying the premium at age 65 and you will have some coverage while it's still reducing. So that is, one of the most common choices we see people take in retirement because they just don't want to bear the full cost of that premium as their income is likely decreasing in retirement. The second choice you have is you can actually choose no reduction, which is where you're keeping all of that current coverage that you have. And I will say with that, you do have the ability to, let's say you have 5 multiples, you can choose to drop that down to maybe just 1, 2, 3, or 4 multiples. Um, but with the no reduction, that coverage is gonna stay at whatever multiple, you select. So for this example, we'll just use keeping that full 5x multiples in coverage. And of course, that coverage price is gonna go up every 5 years. So this is where we see people really experience the most shock in terms of cost. In our example we use, by the time someone reaches age 80, they're paying over $3,000 a month for coverage that costs them $22 a month early in their career. And that leads us to number three. Some people will choose to just totally cancel that coverage in retirement. Just know that if you choose to do that, it is permanent. So you're no longer able to re enroll in that coverage. So this kind of highlights and points out that you want to be very sure of your decision before you do anything with your FEGLI. And that's something we can help walk you through your options. Just know that a lot of these decisions are permanent. So you want to make sure you have something lined up ahead of time before making those choices. So let's look at some of the real numbers. So this is using our example of someone with a salary of $100,000, and they chose to keep their full 5x 500,000 in coverage upon retirement. So you'll see at age 60 to 64, they're paying about $435 a month in premium. That premium's deducted directly from your pension check. So that's an annual cost of just over $5,000 a year. So pretty substantial there. You can see as they go through retirement, like by the time they hit age 70, that premium is all the way up to $931 a month. They're paying a little over $11,000 a year for that coverage. So it's going over 2 times what it was at retirement. And then finally, by age 80 plus, they're paying over $3,000 a month, um, just over $37,000 a year. And that is, if we think about it, I mean, that is over 7 times what they were paying at age 60. So as you can see, that FEGLI Option B premium skyrockets in cost. And it really does so at the worst possible time, which is in retirement, where for most people, your income in retirement is going to be less typically than while you're working. So that FEGLI Option B coverage really increases in price at the worst possible moment. So that begs the question of, should I pivot from FEGLI Option B into a private life insurance? Most likely we see a term life insurance kind of being the comparison there. And it's a good question. I think it depends solely on your specific situation and how much coverage you're actually going to need to keep and maintain throughout retirement. Some things to point out on the option B is there's no type of cash value accumulation. It's just a 5-year renewable term. And so that means that the cost does go up every 5 years. Um, Once you've retired and you've chosen your reduction options, you have very little flexibility. You can't ever add coverage back. You can really only reduce or cancel it at that point. FEGLI Option B is great while you're young and while you're working because the costs are relatively low. Where it becomes a problem is in the long term, if you're planning on keeping that coverage and taking it with you into retirement, a lot of times you can find more cost effective solutions to accomplish that goal. So with private life insurance, a lot of the times you're able to lock in your rate into something like a term life policy that the rate's not going to change as you get older. With that, again, you can have level premiums to where your coverage or your cost doesn't change. And the great thing about that private life insurance, especially if you're still working and you're early in your career, is you own that policy. So if you leave the government, you're able to take that policy with you. because, like I said, it's owned by you, so you can keep it and continue it. So, a lot of times with private life insurance, specifically with term life, you can get a better long term value during your retirement years by locking in a policy now while you're still young and healthy. So that's where independence benefits comes in. We would be happy to help walk you through number one, the coverage that you have through FEGLI, show you how the cost is while you're working, compare that to how it's going to change in retirement. And then we can show you different options for things like term life insurance where you can lock in a cost that's going to be more affordable during retirement. So in the description, what I've done is I have put a link to a page where you can request a FEGLI review. And that will be with either myself, Chris, or my wife, Allie. And we would love to walk you through your specific situation, help answer any questions you have, and really help you begin to put together that retirement plan. So I just urge you to click that link in the description of this video. Also, you can call our phone number. I've listed it on the screen, or just send me an email directly and we'll be happy to help. So with that, again, I just want to thank you for watching the video. If you have questions, let us know, and we look forward to hearing from you.